The days of investing in crypto based solely on speculation and promises are long gone. Now you have products that are bringing in hundreds of millions of dollars in annual revenue. One of these projects is Hyperliquid. Hyperliquid has been both a top revenue generator and a top performer this year. In this video, I'm going to unpack whether Hyperliquid is in fact one of the best fundamental investments in crypto, or if it's just a lot of hype. Now let's get into it. To start, what exactly is Hyperliquid? Hyperliquid is a decentralized perp exchange. It lets you trade assets like Bitcoin, Ethereum, and Solana with varying degrees of leverage. And it's by far the most successful, most used decentralized perp exchange. In fact, it's kind of redefined the entire category because previously this was a niche DeFi category that was promising but hadn't reached escape velocity. And now Hyperliquid is starting to challenge centralized players like Binance and Bybit for market share. In addition to that, Hyperliquid is also a high performance layer 1. It's one of the fastest growing DeFi ecosystems, and it has dozens of other applications on it for things like lending, DEX trades, liquid staking, and more. And if you want to learn more about the actual Hyperliquid ecosystem and Hyperliquid itself, then we've published tons of resources on this channel and on my Substack about Hyperliquid before. We have how to use Hyperliquid on the Substack from last year, a 7-minute valuation framework for valuing hype, an airdrop farming guide. Hyperliquid is, in my opinion, the best environment for airdrop farming since Solana in 2023. And I have videos accompanying a lot of these. I have a video on Hyperliquid airdrop farming, a complete overview of what Hyperliquid is, and then also some analysis on Hyperliquid from February of this year. Getting back to our original question of whether Hyperliquid is in fact one of the most fundamentally sound investments in crypto, or whether it's mostly driven by hype. Given all this, where exactly is Hyperliquid sitting today? Its price is around $38.50, up nearly 500% since launch. And that puts its market cap at $12.8 billion with a fully diluted valuation of $38 billion, already quite large. And to put this in context, this makes Hyperliquid the 14th largest token by market cap. And you have to consider that that includes a lot of things that are not really, really shouldn't be included in the rankings. It includes things like staked ETH, wrapped Bitcoin, another staked ETH. It includes stable coins. So if you're just looking at actual tradable tokens that have their own inherent value, they're not a wrapped version of another token, you only have Bitcoin, Ethereum, XRP, Solana, Tron, Dogecoin, and Cardano above Hyperliquid. And if you look at the fully diluted valuation, then you can see that it's actually even higher. Only Bitcoin, Ethereum, XRP, BNB, and Solana are above it. And those are basically the closest things you have to blue chips in crypto, arguably Bitcoin, maybe Ethereum, maybe XRP is a blue chip because they've survived multiple cycles. But these are basically the closest things you have to like true index majors in crypto. And those are the only things that are above Hyperliquid, which doesn't mean that Hyperliquid can't go up, but it does mean it's playing a different game now. To appreciate substantially, it now needs to be competing not just with your other alternative layer ones, not just with DeFi applications. It has to be competing with the majors in a substantial way. And I think that it possibly could, but that's the framework I would suggest for looking at all of this. Now that we've set the stage with Hyperliquid's current valuation, the way that I'm going to break down the fundamental analysis is first, I'll present the bull case. I'll talk about all the revenue it's generating and how that's being used and why some people are so sure about this token. And then I'm going to go into the bear case. I'm going to talk about some risks related to Hyperliquid today and reasons to be cautious. All right, so let's get into it. To start, we'll talk about the fundamentals. And before we get into the big stat everyone always references, which is revenue, I'm going to say that there are actually other reasons to be fundamentally bullish on Hyperliquid, both as a protocol, as a perp dex, and as a layer 1. So to start, you have the fact that a lot of liquidity is moving into the chain. You have TVL on a steady climb upwards, and part of this is driven by the price of the hype token. However, the hype token has not been up only, but liquidity on the chain, TVL, has basically been up only. And so what that means is that more money tends to be moving into DeFi on Hyperliquid. whether the Hype token is going up or not. Additionally, Hyperliquid has been one of the fastest growing chains for stablecoins. Here you have, for example, since the start of the year, you have the total stablecoin supply growing from around $2 billion to over $4 billion. Now we're used to exponential growth in crypto, but remember the thing with stablecoins is that nearly all of these are backed by actual fiat, or in crypto we're used to more than 2x's, we're used to 5x's, 10x's, but remember that with stablecoins, typically those are backed by fiat. In the case of Hyperliquid, nearly all of them are. And so when you see stablecoin supply growing by $2 billion, that actually means real money moving from external to crypto, or real money that was deposited elsewhere in crypto and actually moving onto Hyperliquid. So that's $2.5 billion roughly in cash that's now been injected into this ecosystem. And some of that's going to get deposited into DeFi. Some of that will be used to buy tokens. Some of that will be used to trade. And so as a result, $2 billion in stablecoins is actually worth a lot more than $2 billion in the eventual effect on the ecosystem. And that those stablecoins are actually being used in a major way. Many of them are being used on Hyperliquid's flagship app, also known as Hyperliquid. And if you look, for example, at the revenue on that app, you can see that it had an all-time high a few weeks ago of $26.6 million in a single week. July had a total of $86.6 million in revenue generating by Hyperliquid's trading app. That's the best month ever. And if you look at what the money on Hyperliquid's actually being used for, a lot of it's being used to trade on their flagship Hyperliquid exchange. In fact, July was the best month ever for revenue generated by Hyperliquid. And this is what people tend to be so bullish on. $86.6 million generated in revenue in July, the highest ever. Total and cumulative, this exchange has generated over $415 million in revenue. So people are using the app to trade, they're paying various fees along the way, and the result is Hyperliquid taking in over $400 million in revenue in total. And this makes Hyperliquid, not just as an app, but as a chain, one of the biggest economies in the world of crypto. I like to think of blockchains as economies. And so if you look at the layer 1 associated with Hyperliquid, the Hyper EVM, then you can see that total revenue of applications on the chain was $94 million over the past 30 days. For comparison, Ethereum was also $94 million and Solana was $214 million. So basically, Hyperliquid is punching with the big boys in this respect. Hyperliquid is on par with Ethereum. It's not an order of magnitude lower than Solana. It's still, in crypto, a 2x can happen overnight when we talk about revenue. So Hyperliquid is actually already to the point of some of these big applications in terms of how much money is actually being spent to use its app ecosystem. And even more than that, there's secular tailwinds in that DEXs have been consistently gaining market share over centralized exchanges for years now. If you go back to 2022, then you can see that less than 1% some months, and other months maybe 1 to 2% of total perp volume was on decentralized exchanges. Now it's 12%. July it was 8%, 8% in June, and it's just been steadily rising. And this trend is largely driven by Hyperliquid itself, and Hyperliquid's also a beneficiary of the trend as it was already happening before they started. You can see that perp volume on chain, so this is only perp volume in decentralized exchanges, had an all-time high in July with nearly $500 billion traded on chain. So basically what's happening is people are going from these centralized exchanges, they're moving on chain, and they're trading leveraged crypto on chain. And most of them are choosing to do that on Hyperliquid. And so a lot of revenue is being generated by the Hyperliquid app. And that's not the end of it, because that revenue is actually going back to accrue value to the Hyperliquid token. A big problem in crypto is that oftentimes you have people using these apps and it's not clear how or if at all that's going to accrue value. The revenue generated by Hyperliquid actually goes directly to buying back the Hype token. And you can see here on this cool dashboard that I came across online. I'll add a link to it down below. And in fact, the revenue going towards those buybacks is turning out to be quite substantial. What this dashboard shows is the years to buy back the total Hype supply with different levels of daily revenue. You can see that the latest is highlighted here, which would mean that currently, you may not be able to read that small text, but currently it would take 4.47 years to buy back the entire Hype supply with the current daily revenue. And if we actually look at how the daily revenue is changing across time, you can see it's not like we're in some anomaly. This is a revenue that Hyperliquid has been holding for months now. And so a lot of buy pressure is going into Hype from these buybacks, and I think that's part of the reason why Hyperliquid's price has done so well, because they're buying it back. And so if you were to lay out the bull case in a nutshell, you have the fact that more people are trading on chain. Hyperliquid is the dominant perp dex by far. It's got more than 50% market share, and it's accruing a lot of value, a lot of revenue from that trading, and it's using that to buy back the Hype token. In addition, Hyperliquid is a layer 1, and so the Hype token is also accruing value as the security for that layer 1, and it's one of the fastest growing layer 1s, in part because of the flagship Hyperliquid app, in part because of the many airdrop opportunities on Hyperliquid today. However, there are some reasons to be concerned, and now I'm going to talk about those. First, despite the fact that Hyperliquid has so many positive stats going for it, as we've seen in the past, attention, stats, usage can be very ephemeral in the world of crypto. And the fact that it's earning that revenue today, it's the market leader today, is no guarantee that it will be in the future. And in the event that it loses that dominant market position, then suddenly it's an application that just has an FDV of $38 billion without necessarily that future potential to back it up. And in the event that it does lose that market position, then it's just a token with a $38 billion fully diluted valuation, but without the revenue to back it up and without the buybacks to support it. And that brings me to my second concern with Hyperliquid. If we look at the revenue over time, $400 million in revenue, that's an incredible amount going towards buybacks. What is the actual demand for Hyperliquid and the Hype token if you take out these buybacks? Because in the event that activity slows down, either because of total crypto market activity slowing down or because Hyperliquid lost market share, suddenly you're going to lose a major source of inflows to the token. And if there isn't that organic inflow as well, you could get hit on both sides. You could both have the fundamentals decreasing and also buy pressure from the token decreasing from those buybacks that you were used to. And things could get dicey quickly in that situation. Furthermore, as a fundamentals investor, even though I'm happy that the Hyperliquid team has been able to push so much value to their token, I think that it's possible that their ecosystem would be bigger and the app would be even more used if instead of buying back the token, they had actually used some or all of that revenue to reinvest into the business. If you went back 20 years in time and instead of reinvesting into the business, Jeff Bezos had taken all the money Amazon was making and used it to buy back shares, probably Amazon wouldn't be the company that it was today. Similarly, I think to actually reach their full potential and be, say, a multi-$100 billion business, it's going to take investment. Hyperliquid didn't raise funds, which is incredible. But now that they're generating so much revenue, it would be great if they could actually reinvest that. And people often think this is bearish. And I suppose I'm talking about it as a bearish thing for the token, but this is actually a bullish position because it means you trust the team. If you believe in the team of an app, if you believe in the Hyperliquid team, you should believe that they are skilled enough to reinvest the money in a way where they could actually grow Hyperliquid. And so what I'm saying is I think it's great that they're distributing value to the token, but these $400 million, imagine if they had used it to acquire some complementary TradFi apps or to otherwise do some sort of M&A that would take Hyperliquid to the next level, to buy a major prediction market, for example. And I think that would have been great because I think the team behind Hyperliquid is skilled and they would have been able to do a lot with those resources. Let me know down in the comments what you think about Hyperliquid, and if you want more videos like this, be sure to like and subscribe. Until next time, this is Dynamo DeFi.